Again, I'm Jonathan with IVolatility. I tend to host these Tuesday sessions where we go live and we like to demonstrate specific tools that you can implement right away as an IVol user, to be able to implement in your options trading. So the way to think about IVolLive is your companion tool for analysis. So you want to use IVolLive to help find, confirm, refute trading theories or theses that you have. So that's what I use it for every day. I'm an active options trader. I tend to be intermediate term options trader. Every options trader is different. Some are long, some are short. But my goal with these webinar sessions is to show you how to use the tools so that way you can apply them to however your trading style is today. And so at the end of this, we'll have a Q&A session. If you think of something after the call, feel free to shoot us a note. But right now, I want to go ahead and kick off. Again, on these Tuesdays, they tend to get pretty busy, so you might hear me pause just periodically to let people in. But for the most part, what we'll do is we'll use some specific examples today to kind of drill down some different use cases for the real-time spread scanner. So what I did is to simulate kind of the experience if you've just joined us as an IVolLive user, I logged out and just logged back in right before this webinar. So when you do log in, you'll see our little green and white concierge welcoming you to the platform. There we go. There's some more people joining us. Hello and welcome. And we will record this as well. So we'll have our team kind of edit it and send it out later this evening. Once we have a chance to do some movie magic. That way you can always go and rewatch an important section or two. So again, welcome. Today we're going to cover the real-time spread scanner. Again, I'll briefly recap what we covered last week, and then I'll focus on the strategies we didn't cover last week in our session. And when I send out the email, I'll have our team include last week's session as well. Again, I know it's busy, and I know, today we're coming off the market being closed yesterday. So I'm sure everybody's playing catch up, but welcome to those that just joined us as well. Here, we just logged into IVolLive. We're just kind of navigating quick little housekeeping notes. You're able to access the key tools of IVolLive here on the left. You can always expand or contract that view with a chevron. You're also able to access them here. So in these Tuesday sessions, we choose a specific tool and we do a deeper dive. So today we're going to be focused on real-time spread scanner. In future sessions, we'll do the P&L calculator, underlying sentiment analyzer, which is one of my favorite tools, as well as backtest data download. So again, as an IVolLive user, you have this treasure trove of data available to you. So it's all about, okay, how do you harness that to find actual trades you can make to make profits? So here we go, just a bit more about, your interface. And then if you ever have any questions about IVolLive or anything else, we're at support@ivolatility.com. So if you just happen to maybe have found this webinar online and are not a current user, just shoot us a note at support@ivolatility.com and we'll get you going. All right, so here we are. I don't want to spend a lot of time on this because I want to focus on the real-time spread scanner. But if you ever are curious how to register for these webinars, all you have to do is, click here. When you log in, click join. That'll take you to the screen and you'll see the next upcoming class and appointment that you can schedule. We do have limited seating on these because we like to keep it, kind of white glove service. And so we can only accommodate so many. So I would just go ahead and register in advance, get in the habit of logging in and registering for the next upcoming webinar. Here, just real quick, you'll see some tidbits going on with the news. What's great about this is, sometimes when I log in, I have a preset trading plan like today, which we'll cover. Other times I'm looking for trading ideas. So latest news is a great place to pull some of those ideas from. Another great place is our market news and research. So, in some of these webinar sessions, we've used a lot of these. Like last week, we used Dish as our example, and we demonstrated how to use the real-time spread scanner to design a put trade, a call trade, and a few other strategies that I'll briefly touch on today. But this is a great example of how you could pull some ideas from the content that we're putting out organically at IVolLive. So we'll always give a few charts. We'll tell you what we're looking at. And we'll say, okay, well, all of that's great, but how do you actually use it to potentially make money? So that's what I like about these articles. I'm always getting some good ideas from our editorial pieces here and from our latest news here. Then my first step before I jump into the real-time spread scanner is I'll go to IVolLive. So again, I have preset stocks I want to talk about today. So I've got Activision and Intel mainly. Last week we talked about Dish. But just again, if you're brand new, I don't want this to go completely over your head. So when you go to IVolLive, what you'll come to is you'll come to a tab here that says custom scan. And all this is telling you is that you can design and run custom scans from this tab. All right, you don't have to, but you can. So some of the things that I do, even, when I was getting my feet wet with the platform many moons ago, some of the top things I do when I log in, I'll run a top stocks by volume. This is going to show you where the action is any given trading day. So yesterday there was nothing going on because the market was closed, but today we could see that within the S&P, the top traded name in terms of options contract OV is Tesla, which is no surprise. And then you could choose, how many results you want to see. Maybe you want to analyze a lot. Maybe you just want to look at the top 5. This is one of my favorite screens because it just tells you where the action is very quickly. My other favorite screen is this implied volatility mean versus 20-day historical volatility. So again, if I had no trading plan and I just am looking for ideas, this is one of the first places I come because it tells me where the future IVX, implied volatility looking ahead, could be different than the past. And I can run that against my favorite index, the S&P, and look at this, Activision Blizzard. So this is actually, when I was running these scans, Activision showed up and I started digging deeper, which led to a few different use cases that I'll show today. So this is a very valuable, relevant scan. And basically what it's saying is, look, since the future could be different than the past, there is potential trading opportunities here. So this is one of my favorite screens. IVX historical range. So a question that typically comes up is, hey, can I look at a 52-week range for implied volatility? And you can. So implied volatility over here on the column, this is like the 52-week range. So like a stock has a 52-week high and low. Implied volatility ranges have a 52-week high and low as well. And why that's important is you might get an IVX reading, for an example here on NWSA, and it says 30.47, right? But it's like, is that low? Is that high? You have to always put that in context. And that's what this screen does for me, is it puts all of that in context. So I can tell, well, look, this current reading for NWSA is significantly high. The closer to 100, these numbers are, the more significant that they tend to be. And so, this is another screen that I'll run if I'm looking for trading ideas. And then IVX changed from yesterday. So this will actually pull from Friday's data, since, yesterday the market was closed. But here's another one where it's like, okay, where's the action now within a certain index? And you don't have to trade the S&P 500. For our friends that like to trade other indexes, we have the Canadian stocks, we have German stocks with the DAX, we have European stocks, we have Indian stocks, we have the Russell 2000 if you want to go, a bit smaller, see where the action is in those names. Here we go, and bio. So, again, feel free to choose when you're putting these ideas together, like the TX60, this would be Canada. So as you're putting together your trade ideas, this is probably the easiest place to come to get a shorthand list of trading ideas you want to look at. And then you can just come back to this custom tab. Again, this is defaulted to the Dow, DJX, and it's running a screen against everything in the Dow. I have all these different columns that I can use to further analyze. So what we do is we cover how to use this stock monitor tool in its own dedicated Tuesday webinar. It's a lot to unpack. So again, I want to focus on, real-time spread scanner today, but suffice to say, as you build the list of names that you want to analyze, if something pops out to you, for an example, Coke or McDonald's from the shorthand list, what you do to create a new group is you click on my new group, shockingly, and then you would name it. So June 20th, we're going to do a real-time spread scanner today. So just so you guys see how we create a new group, hit save. And then from here, Activision Blizzard is what I want to show everybody today. I want to spend some time on that, as well as Intel. Last time we spoke about Dish. I don't want to cover too much today, but we'll go ahead and add that, to this list. And then you can see, this is our list that we'll further evaluate. And this is how we create a shorthand list. And what's great about this is now that we've created this list, it'll follow us everywhere, including the real-time spread scanner. So you can actually run scans, not only against Activision, for an example, but against this custom list that you just created. So before we jump into real-time spread scanner, just real quick, kind of drilling the point home of why these were interesting to me. So Activision Blizzard has this big surge, this discrepancy between its IVX and its historical volatility. So you can see that on the left, the interface here, if you're just seeing this for the first time, we always show fundamentals on the left. So these are things like price, bid ask, implied volatility. We are named IVolLive, so we focus a lot on implied volatility. And then our open, high, low, close, this is for the stock. And then our historical volatility. So you can always add to or take away settings for fundamentals or for anything else just by clicking on gear icons, next to the, field or the category, and going from red to green and hit apply. It will apply only to Activision, or save as default, and it will apply anytime you pull up a new ticker. So you can see I've got 2 Activisions here from when I was doing research beforehand. But let's just limit that down to 1. You can see those new fields just popped up, which is excellent. But the key thing, that really got my attention was this, when I ran that screen in the market this morning, when the market opened at 9:30, this difference between IVX at 33 and historical volatility, at 13. And so that was, here it is, historical volatility at 1354. So there's a big discrepancy there, almost 2x, which is significant because what's going on with Activision is, Microsoft has agreed to buy them at 95 a share, and they're only at 81 a share. So you say, well, why is this trading so far away from the deal price? Well, because there's skepticism that the deal will get done. There was recently some court rulings that put it on pause. And so there's a big spread between the current price and the deal price at 95. And there's also a big spread between implied volatility and historical volatility. So in the past, I trade merger arbitrage a lot. And so when I see things like this, a big difference between, current price and deal price, and a big spread between historical volatility and implied volatility, typically that's been good hunting ground for me to put on trades. And we can view that more in the chart. So one of the great things about implied or IVolatility is that by virtue of your subscription, you get up to 5 years worth of data on spot price, which is in blue. So this is Activision spot price. You get 5 years worth of data on Activision's implied volatility, which is this green line. So here's our legend, green. And then you get 5 years, up to 5 years worth of data on historical volatility, which is our orange line. And again, I'm a intermediate term trader. I tend to like IVX30, which looks 30 days in the future, and HV20. So these are actually apples to apples, because HV20 measures the last 20 trading days. IVX is looking at the next 30 calendar days, which would be 20 trading days. So that's kind of, something I want to just make sure everybody is aware of, that little nuance. But look at this. We can go, 5 years back on these, different data points, which is fantastic. The other thing you could do is you can always simplify the view. So if you got rid of historical volatility and you just had implied volatility, what's beautiful about this is it shows you the inverse relationship. So in Activision's case, the higher Activision went, what is this? This is, looks like 2021. Then, you could see as the Activision price peaked, its implied volatility continued to decrease. This is a beautiful just demonstration of that inverse relationship between price and implied volatility. So then in January, though, let's focus on January. And if you ever want to find a focal point, you can always click this drawing tool, and then you can just circle it, exit, whatever you'd like to do. I am not an artist, I'm a trader, but that is my best attempt. And the reason why I circled this point is this is where Microsoft announced the acquisition, or its planned acquisition, of Activision. So you would think, okay, great, one of the largest tech companies on planet Earth offers to buy, one of the most profitable video game publishers of all time. This stock should have gone to the moon. But the problem was, from the get-go, from the rip, there was these anti-monopoly concerns. So there's all these different jurisdictions, Europe, Asia, North America, where this merger has to be approved. So there's an uncertainty, and that uncertainty has led to the price, which is this blue line, has led to this price going almost just sideways, right? So it's been range bound. Remember, this is January 2022. And if we go here, this is another good demonstration of what you can do, with this particular view. I can even do a different color. And you could show that, Activision has been range bound between, here we go on this side, like 75 a share and 85 a share. Really, it hasn't come close to reaching the potential 95 a share, which is the buyout price, which is somewhere over here. So I could come here and I could come right here. This is our, potential buyout price. So you could see there's quite a gap. Meanwhile, implied volatility has been going nuts periodically, as different jurisdictions either say, hey, yes, this is okay, this transaction can happen, in which case implied volatility drops, or no, let's wait a minute, put this thing on pause, and then implied volatility spikes. So there's some really interesting trading setup here with Activision, because what's going to happen is either the mergers, the buyout with Microsoft is going to be approved, and this will shoot higher, from current prices to the deal price. So we'll shoot higher. So either that will happen, or what's going to happen is the deal will get canceled. The jurisdictions will say, hey, look, this isn't going to happen. No way, not on our watch. And then in that case, the price will break below the range. And just delete that. In that case, the price will break below the range that it's been trading at. So this is like a perfect setup for potential spread trades, right? It's also, if you're just starting off with options, it's a good opportunity to just buy a call, and maybe bet on the upside. It's also an opportunity, if you think that the deal won't go through, to buy a put and bet on the downside. So kind of like Dish, in our example last week, Dish has this pending milestone that it's trying to hit by the end of this month, and if it hits it, stock should go higher. If it doesn't hit it, stock will go lower. So here was Dish, similar layout. We have fundamentals on the left, options chain down here. We have our chart, over here. And if we look at, on Activision, I showed up to 5 years worth of data, but you can also drill down 24 hours, 1 month, 3 months, 6 months. So we can see if we go a little bit lower, if we just go to 1 year for Dish, and we eliminate historical volatility, we could see this beautiful chart here of price going down, implied volatility going up, and this is about to break. Like, something is going to happen here, and that's why we use Dish as our example last week. But if we stay focused on Activision, which, by the way, that's a good kind of teachable moment too. You can have multiple tabs open in your browser of IVolatility. So that way I could have kept that chart for Activision pulled up. So you can see I've got multiple charts going. Typically when I'm using the system and I'm trading, I've got 3 or 4 IVolLive charts up on my browser. You can also customize these tabs here. So you could have Activision, Intel, Dish. If you want to look at Activision first, you can move them around. So those are different things. Again, we get into those when we do our IVolatility stock monitor webinar, but some quick little hacks. So now that I know something's going to happen with Activision, it's going to break out one way or the other. I can come here to the real-time spread scanner. And of course, if I'm putting together a whole trade, I'm also running things through sentiment analyzer, P&L calc, etc. But for now, I just want to focus on how I would use the real-time spread scanner to help, confirm and look at interesting trades. So here we go. We're real-time spread scanner. Anytime, a couple more joining us here. Anytime you go to one of our tools, sentiment analyzer, P&L calc, what have you, you'll get through that little welcome message. And they all have a PDF guide. And I want to point that out because it's very valuable. If you still have a question after this webinar, or, it's just a simple, question for an example, you could come here, go to the table of contents, see what you need, Control F, and then, type in a keyword, and it will take you straight to that keyword in the document. So all of our tools do have these guides. We're always updating them and keeping them fresh. So that's a really, really good resource in addition to these webinars and to our support line. So if we wanted to just do a quick recap of what we did last week, and we wanted to start off with the most basic strategy. We said, look, we're confident. We've studied Activision. We've studied the deal. We're confident this thing's going to go through. Activision is going to go from its current price, $81.74, and it's going to go higher. So at the most basic level, we want to buy a call. We want to look at all the calls available to us for Activision that kind of fit within our strategy. So what you would do is you would be going long the call. So you're betting on the upside. And then you would go here. It's under naked call category for the strategy. And then what you can do is you can always choose, like, do you want to see the top 200 results? That might be too many. I just want to see the top 20, let's say. And I can sort by risk reward. You could sort by any of these things: capital required, risk reward. Again, depending on your trading style, you can decide. But for now, let's leave as risk reward. And then we come from left to right. We go to the stocks tab. So the default, when you come to real-time spread scanner, it'll run the spread scanner against whichever strategy you choose. It'll run that against the S&P 500. But what we want to do is we want to run it against a specific stock, right? Which is Activision Blizzard. So I'll show you guys how to do that, but just know that you can run this against all of our preset filters here. And you can also run this against your custom list. Look at that. This is the custom list we set up like 5 minutes ago, June 20th, real-time spread scanner. So again, it's beautiful creating those custom groups. Those are able to follow you through all of our different tools. That's how everything kind of sings and talks together. But for now, we're interested in our favorite video game publisher at the moment. When you're just starting out, I would leave all of these as is. They're defaults for a reason. But again, as you get pretty advanced, you could decide if you only want to look at results. The stock, do you want to filter for stock sentiment that's bullish, neutral, bearish, or any? Again, for now, we'll keep any. Do you want it to be with volatile, quiet, or any behavior? For now, any. IV index, do you want it to be low, normal, or dear? Well, we already know that Activision is dear. It's expensive right now for its IV index, so we'll leave any. And then you can always say, well, within that IV index, do we want to look at a 1-year range? Do we want to look at that against historical volatility? But again, I already ran those scans in IVolLive, so I already know that this is high relative to historical volatility. So I'll just leave that as is. Options. So here's where you decide on your expiration. Again, are you is your trade for a short-term duration, an intermediate, or a long-term duration? In this case, my thesis with Activision is by the end of this year, we'll know whether this deal is going to happen or not. That'll be about 2 years in, all of 2022 and all of 2023. For a deal this complex, that's a reasonable amount of time. So you'll notice when I click on the midterm expiration, this automatically populated August 29th through December 20th, which is perfect. That's exactly the time range I'm looking for. I could tweak this. So I could say, well, I actually want to see all the way to the end of the year. So, December 31st, 2023. And then the moneyness will adapt to my expiration, and it will adapt to the current share price. So I can leave that custom, or I could do at the money, or I could do any. So let's go ahead and do at the money. And we come here to risk reward. So again, as you get more advanced with the system, you could say, look, I don't want to look at any trades that are going to require more than $1,000 in capital, and I don't want to look at anything, or I don't want to look at a debit that's any greater than 1,500, right? Or a risk reward percentage less than or equal to 100%. So those are different things that you can play with as you get more familiar with the system. But for now, we'll leave it blank because we already have our trading thesis anyway. These are really good if you didn't have a trade in mind. So if you didn't have an Activision in your back pocket and you wanted to screen for potential trades, these are really fun inputs to play with. Same thing with Greeks. So if you're very advanced, you could play around with delta, vega, gamma, theta, alpha. Those are the 5 different presets that we allow you to play with for the results. One screen for results. So then I hit search, and here we go. So again, at its most basic level, here are the different call options that our system thought is interesting. So here at this top one, we're buying the November 16th, 2023 87.50 call, and we're going to spend $4.15 to buy that. So you can see here's our current stock price for Activision, 81.75. So here's the capital required, $4.15 times 100, since each option trades in increments of 100 shares. Our position cost, which would be that 415. If the stock moves 2 standard deviations in our favor, so all that's saying is if this goes from 81.75 and it goes higher by 2 standard deviations, that's our max potential profit. Here's our maximum potential risk, $415. So here's our risk divided into our reward. Our risk versus capital required. So anytime you buy a call or buy a put, whatever you spend in that premium is you could lose, of course, 100% of that if the trade doesn't go your way. So that's why you'll see this column as 100% anytime it's buying an option. Here's our max return. And so you can filter, these columns by risk reward. You can filter by 2 standard deviation risk. And then to dig deeper, let's say we were interested in this particular trade in particular, here we say, all right, well, this is what we're doing, but like, what do we need this position to do to make a profit? Or what if this position moves against us? What does the loss look like? Most people are probably used to using the P&L calculator to analyze that. Here, what you may not know is within the real-time spread scanner, there's a mini P&L calc, written in right here. So what this is allowing us to do, for an example, if I hit simulate, what this is saying is we have time on the horizontal axis, right? So here's time, 10 days, 20 days, 30 days from now. And then we have the underlying spot price for Activision, its stock price here on the y-axis, right? The underlying price. And what's neat about this is this tells us different scenarios. So if Activision goes to $90 10 days from now, here's what our profit looks like on the option. So this is a really, really cool tool to use. Again, it's like a mini P&L calc built right into the real-time spread scanner. And you can update this. You'd say, well, look, this thing doesn't expire till November. So what happens if we change our increments to every 30 days, right? So we have 30, 60, and 90 days. And this will tell you, what will happen. So this is a really, really cool mini P&L calc that I would certainly utilize. And then once you analyze that and you say, okay, well, this has the lowest risk reward, but I feel confident. Or you could say, look, I want to go with the highest risk reward call option, this 36.66. So here we're buying the November, let's expand this view. Here we're buying the November 17, 2023 $75 call for $11.20. So it's already in the money because the stock price is 81.86. So it's going to have a very sensitive delta. As Activision goes higher, so too will this option. It's just going to cost you more upfront to buy. But point is, we could come here, we can update, we can say, well, what about every 45 days, right? And this again will be our nice little sweet P&L calc, quick and dirty, for this particular position. And so we know where we need the stock to go in order to start showing a profit. And we know what happens if it starts going against us. So once you find a trade that you like, copy to pocket. And here's what that just did. If you go to this pocket, this is like our bullpen. So if you're into sports, and you have a bullpen, you have a lineup, this is where you put your lineup of trades that you're interested in. And then you can always save that, which we'll do in a moment. And then you can open it anytime you start a new session. But for now, let's go back to profile. Let's say we wanted to do, just real quick, the opposite of that. We wanted to go short Activision because we say, look, there's no way this thing's getting approved. It's going to get canned. Let's bet against Activision. Let's bet it on Activision going down. We would just change this to going long a naked put, right? Because we're buying the put to bet on the downside. We'll still show the top 20 results. We'll keep it on Activision. We'll keep all of this the same because ultimately, our thesis is this thing's going to break either higher or lower. And then here we go. We have all the system's favorite put options. Here again, we can filter by risk reward. Now, when I come here and I click on this, this is going to be the opposite. So what this is going to tell us is this is the same expiration, November. Let's go 45 days. Let's hit simulate. This is for every 10% change in Activision stock price. And we could see, this is where we start making a profit, right? Because it's going to cost us, $840 to get in this position. So we won't start making a profit until Activision drops to 73.63 a share, for an example. That's where we start showing a profit on this trade. So now I know exactly what the level I need to look for, $73 a share for this particular trade, which is very, very valuable information if I'm short the position. So again, we can copy that to our pocket. So now I want to go to some more advanced strategies. Of course, another kind of really easy one, maybe we could show real quick, is covered call. So covered call is also very popular strategy for our users. Essentially you're buying the stock and then you're selling a call against it. So you're sacrificing some upside, but you're getting upfront premium payment paid to you. So, we can just run that real quick. We could have this thing play out before the end of the year, and we could see if our system has any interesting trades for Activision, which, it does not, but there was one I want to show for a cover call screener. I'll show you before we wrap up. I was running it. It gave me some really cool results before we wrap today. So another strategy that we could show that we did last week was Straddles, Strangle, and Gut Strangle. I don't want to go into those. We used Dish as our example because, again, Dish has this imminent catalyst at the end of this month. So it's either going to go higher or lower. But if you wanted to implement those strategies and you want to run those on Activision, for an example, you would just, select Straddle. Again, we'll include the video where we go through this with Dish in the email we send to everybody that registered today. But with the straddle, again, we're here, long straddle. With a straddle, what we have is we have the same strike price and we have the same expiration, right? So you can see we're straddling the position with the same strike and the same expiration. So that's the key thing here. And then what you're anticipating is that the stock, so Activision, will move significantly in one direction, either higher, and so you'll make your money on the call side, and then the put side will expire worthless, or move significantly lower and your call will expire worthless, but your put leg will show a profit. So again, we demonstrated that for Straddle with Dish. We demonstrated that with Strangle. So again, just to pull this up, if you're fairly new to this stuff, the Strangle is different on one respect. We still have the same expiration dates, but what we're doing is we're strangling the current share price. So the current share price is $81.75. We're strangling that with a $75 put on the low end, and we're buying an $87.50 call on the high end. And again, this is similar. We're anticipating a large move, either higher or lower, to make a profit either on the call side of our trade or the put side of our trade. So that same theory that we use with Dish also applies for Activision. But what I thought was cool about these two different examples, and then a gut strangle. Gut strangle is the same thing as a strangle. You'd have the same expiration, but you would have different strike prices. So what I thought was cool about those examples was, like if we come back here to Strangle on Activision, you could see with Dish, the main difference is we used on the expiration short term, because that catalyst was going to happen, within the next month or two. So you could see the system automatically filtered out anything that expired after August 29, 2023, which was great because, none of that was relevant to our Dish thesis. What I thought was great about Activision is it's a similar thesis. It's going to make a move higher or lower, but it's a different time frame, which is a midterm time frame. So those are the strategies: Straddle, Strangle, and Gut Strangle that we covered last week. Today, I want to move on to calendar spread. So I want to keep this on Activision. So we have Activision here, and I want to keep this midterm. I want to reset this to at the money. So that way we have, and you can see this is expiration. So we're looking at 3 to 6 months, which again is perfect because this is where we think either the buyout from Microsoft is going to happen or not. So if you just joined us, that's kind of our working theory here. The Microsoft buyout's at 95 a share. So there's upside from Activision's current price of 81.75 to that 95, hypothetically. There's also downside because if the deal is nixed, Activision could go lower. So that's kind of our working thesis for this sample trade. Then we hit search, and I'll explain what we're looking at here. So with a calendar spread, you have two things going on. In this case, we're buying one November 16th, 2023 $80 call, and that's going to cost us, $795. On the other hand, we're selling the July 28th, 23 $80 call for $4.60. So what does this mean? So basically what we're saying is when you have a long calendar spread, which is where we are now, let me pull that up so that way we know apples to apples what we're talking about. With a long calendar spread, you're betting on the upside. But what you're saying is look, this calendar could be complicated. So we're betting on the upside, but we just don't know what date that upside will kick in. That's where, the calendar terminology comes from. So what we want to do is we want to go long, but we want to have, but we also want to sell an option so our upfront cost is lower. And so here's what this means. When we sell the July 28th, 2023 $80 call for Activision, we're going to receive this $4.60 upfront. So when we simultaneously buy the November 16th $80 call option for around $8, it doesn't cost us $8. It costs us the $795 minus the $460. That's why you'll see here in the capital required column, it costs us $335. It doesn't cost us $795. So you save almost half the upfront cost by trading a calendar spread instead of just buying this call option outright, like we could have done when we did our first scan. So that's the power of a calendar spread. Now, in a perfect world, here's what we want to happen. We want Activision to really trade around its current price between now and July 28th. So in this case, in a perfect world, we'd want Activision to expire below 80 on July 28th, because then we'd keep this whole $4.60. And then we'd want Activision to start moving higher after July 28th. So that way this November expiration would turn profitable. So, you can see this $80 call is already in the money because the stock price is 81.77. So what I would probably look for is something that's slightly at the money or slightly out of the money. So this one looks very interesting to me. So we'd be buying the 82.50 call for $665. We'd be selling the 82.50 call for $297. So we'd get a little less upfront income, but we're not already in the money, right? Because the stock price is below this lower band that we're selling. And so, this trade looks more interesting to me. So I would click on this, and then I would come here and I would expand out this trade. So as you can see, what's great about this is when you click on that, you'll get kind of the Greeks for each leg, the call option, the put option. So again, depending on, what, you also get the implied volatility for each option too, the call portion and the call portion. So this is where we're buying the call. This is where we're selling the call. So this gives us, the current setup. Okay, here's Activision stock price. Here's the capital required to put on this trade. If Activision moves 2 standard deviations in our direction, here's our profit. Here's our risk, which is the what we receive minus what we spend. Here's our risk reward. So, and of course, the potential risk when it says 100% is just saying if the spread expires worthless, then this is your max potential loss, right? $368 a contract. So then we could come down here. This is there's an expiration in July, which is a month from now, and there's November, which is a handful of months from now. So we could say let's look at time in increments of 30 days. And let's look at what happens when Activision moves, 10 percentage points at a time. And you can see like this is our ideal scenario would be within this time frame if Activision stays right at almost $82 a share. And we could also say, all right, well, let's come out and see if we have bigger movements in Activision. And again, this is telling us our ideal price point for Activision throughout the length of this trade, which is very, very, very valuable to know. And so if we like that, we can keep the check mark and we can hit copy to pocket. So now we have a calendar spread that we're interested in. And I also want to show a long bull vertical spread for Activision. So you guys can visualize what that looks like on our system. We'll keep everything here the same, looking at midterm, hit search. And there's a difference. Oh, here, let me come here, options, and then that's hit search. So here we go. Here's our result. So there's a difference between a calendar spread and a bull vertical spread. So with the bull vertical spread, what you're basically banking on is a tight trading range. And here's what I mean by that. So you're buying one expiration and you're selling one expiration, but it's the same expiration, November 16th, 2023, but you're doing different strike prices, right? So that's why it's called a bull vertical spread. And the way we make money from this, you would do this if you expected the stock to trade in a tight trading range, right? That's where the bull vertical spread, makes sense. And so what this tells us is the maximum capital required. Now, how do we get to this? Well, we're buying something for 75 cents, right? But we're selling something, the other leg, for 18. So 75 minus 18 is 57. Multiply by 100 shares per contract, and that's how we get the 57 capital required. Our maximum potential profit. So how do we come to this? Well, with a bull vertical spread, just like with a bear vertical spread, your max potential profit is the difference between the strike prices. So this is very, very simple. We have 105 minus 100. That's a maximum potential profit of $5, right? So $500 minus what it's costing us, $57, equals our total potential profit, right? So this is the max we're going to earn. It doesn't really matter, if Activision goes to the moon or if it plummets. This is going to be our maximum potential profit. So we could come here again. This screen is great because it lets you, just kind of analyze the trade a little bit more, see what we're looking at. Okay, here's what we're dealing with. Simulate, here. So we could see over the next 10 days, if Activision goes to 98.28, that's where this particular trade starts showing a great profit. But again, our potential profit, even though we start showing a profit, our potential profit is going to be capped with a bull vertical spread. So if you don't mind capping your profit and you think that it's likely your stock is going to trade within this range, then the bull vertical spread is an excellent tool. So moving right along, we also want to show the bull diagonal spread, and where that is different than the bull vertical or than the calendar spread. So let's go ahead and keep this on Activision. Let's keep this on any medium. And we hit search. Here we go, lots of results. So again, let's pull up our strategy. So we're going apples to apples. So here we go. We have Activision on this first result. We're buying the November 16, 2023, $95 call for $1.30. So here we're betting that Activision is going to go higher than $95 a share by November 6th. And then here we're selling the July 21st, 2023 $100 call for 4 cents. And so, in this case, we're selling the near-term expiration, July 21st, but we're only getting 4 cents for that. And then we're using that to buy the long-term expiration, right, for $1.30. So that's why you see it's $1.30 minus 4 cents. That's why our capital required, is $1.26. I don't really like that trade. I mean, this is a small premium to get. Although it's unlikely Activision will go to 100 because that's $5 higher than the acquisition price. I still don't really like how low that premium payout is. So again, we could sort by risk reward. We could sort by max return, just as an example. So here it's in ascending order. So here's our most conservative trade because we're buying a very deep in the money call option for Activision. Because it's at $60 call with Activision already at $81.78. So that's going to cost us, $2,370 to do that. And then we're selling a deeply in the money call on Activision as well. So when you do the math, we're in this position for still only $660. It's going to be a high delta, since these are both in the money. So, that's an interesting trade as I just kind of scroll through. This one's an interesting one to me too. Selling the July 21st, $73 call for $9.55 and then buying the $72.50 call. So in the money, but just not quite as extreme. So, I'd click here. I'd run the analysis. I would do every 45 days, and then I would look for maybe 30% move. And again, this will show me all the different scenarios to look for, the ideal target price for the stock. And then I can jot that down. And then if I want to do further analysis, again, I copy this to my pocket. And then as you can see, as we've been kind of running through these strategies, we've added, 4 interesting trades to our pocket here. So now what do I do with this pocket? Well, you're able to click on the trade, obviously, and go straight to this spread details and do your little P&L simulation. You can also keep this tab open, and then you could be here and you can come to the P&L calc, and then you could run the scenario through the full P&L calculator here. We would just add in the trade, because with the P&L calc, you can add options leg, et cetera, et cetera. So that's another use you can do. You can also save this pocket. And what's great about this is, let's say you have to step away for lunch or a meeting or whatever, you have to drive home and you want to pull this up when you get back to your home office. What you're able to do is then come here. Let's say you're in a brand new session, you just log in right when you get home. You can pull up a pocket that's going to be blank. You say, oh man, I just lost all that work I did this morning. All you need to do is hit open pocket, and then you come to downloads, pocket, and here we are. Those are the same 4 that we just evaluated and found interesting using our real-time spread scanner. So then the only thing we didn't cover so far is the monitor. So what is the monitor? So the monitor is great if you want to get a watch list of a specific stock. And we spent today on Activision. So let's go ahead and key in Activision. And then you say, okay, do I want to look at calls or puts or both? So in this case, we know Activision is going to break either higher or lower. So we want both calls and puts. If you were only bullish, you would only look at calls. If you're only bearish, maybe you only look at puts. Expiration dates. So here we could say, well, we're interested in today. And then, we think, look, this thing's going to play out by the end of the year. So, December 31st. And then we can specify, what I like about this is we can really specify our strikes, and we can really hone in, because we could say, look, the current price was around, $82 a share. I only want to see results. Results are only interesting to me from, $65, or excuse me, from, let's say, $75 a share, 70 to 95, right? And here we go, hit enter. And you'll see these results. Ooh, that changed on me there. 1 second. Let me come back. This is another teachable moment. You could key in the dates, and then you could key in the strike. So let's tighten that up. So from 75 to 95, right? So now we're only seeing Activision. Here we go. Here's our quote time. I'm using a real-time account. So, depending on what level of account you'd like for IVolLive, you could have real-time like what I'm using. So all of this updates in real time, or you could have a slightly delayed, just doesn't come with all the bells and whistles. So here we have the underlying, and it's telling me what's happening with the underlying. So it's down slightly for the day. Here's our IVX, which we know is high, since we already did that analysis with IVolLive. Here's our strike, here's our symbol, here's our type. So again, you could do all calls, all puts. Here's our expiration, so we went out to here November, or as low as June, or as recent as June 23rd. So that'd be this Friday. So if you're a super short-term trader, you could say, hey, look, just show me expirations from, today, all right, the 20th to, what was that, the 23rd, right? 23. And there we go. We only have, these are options trading. So if you're very short term, you can say, look, I only want to look at things that are going to expire this week. And I don't think there's going to be a huge move to 95 this week. I think maybe we could see a bounce to 85. or we could see a drop down to 75, for an example. And then that's a way to really narrow this list down. And what's great about this is, this is almost like our options chain view on IVolLive, where you get the underlying price, the implied volatility, the symbol. You also get the type, right? You get the expiration, you get the strike, you get the bid and the ask of the option. What's great too is you get the implied volatility of the option, and you also get the delta and vega of the option. So, this is really cool. You can see these ones that are pretty far out of the money. There's not much juice there. So again, we can even tighten this up further, say 71 to 82, 79 to 82, because, this is a more likely trading range, for Activision over the next couple days. It's probably not going to make huge moves, but it could, bounce by a few absolute increments. And then you could see, well, with that, what's happening with the underlying options chain, and how sensitive, we have a very sensitive, the 79 strike here on the call has a very sensitive delta, right? And so this tells you a lot with a little. And again, if you had to take a break and you wanted to keep this watch list, all you would have to do is hit save as. So this is saving our monitor, which is different than our pocket. The monitor is great for specific names. Like you can have as many monitors as you want. You could have an Activision monitor. You could have a Dish Network monitor. You could have a Tesla monitor. And then the pocket, on the other hand, is very, very useful for multiple trades. Like we could have Activision here, we could have Dish here, from last week. And then I'd have this ongoing running list of all these different trades with all these different stocks and all the different strategies that I liked per stock. So that's the difference between the pocket and the monitor. But if I came back over here, my monitor is blank, right? Because it's a different technical session on IVolLive, but I could just hit, open monitor and then come here. And here is our, voila, Activision monitor. So again, these are great ways to create a watch list, because what we've done is we have our watch list here in the monitor. We have our watch list here for interesting trades in our pocket based on the strategies we covered today, right? So we were just on bull diagonal spread. And then if we come over to IVolLive, we also have our custom group that we created today just by running, a couple simple scans, nothing too crazy. We created this new group here. We titled it June 20th real-time spread scanner. We hit save. And then we added, the three that stood out to us. We don't have time to really dive into Intel and Dish. Dish we did do last week, so you'll get that recording in the email today. Intel, what we'll do is next week, I think Intel will make a great example when we go into these strategies. I think Intel can make a great example for conversion trades, which are very conservative, but also very powerful. And I also think it will make a great example for our covered call strategy, as well as covered put. And then we can also cover the bear vertical and the bear diagonal spread tomorrow, or excuse me, not tomorrow, but on our next week's webinar. So we'll send out an email with the details for next week. But I think those 4 strategies will be great. And what we can do is we'll keep our same group and we'll keep playing with these 3 so we can drive these points home. And so that way it's not overwhelming for anybody. And then what we'll also do is next week we can recap and we can finish up by showing how to scan against a universe. So on the last couple of weeks, we've had pre-picked names to analyze, but what happens if you don't? So I'll demonstrate how to run different screens to then build a hit list within the pocket and then evaluate further, like on the P&L cal, sentiment analyzer. And then again, you'll start seeing how all of these tools work together to then go to your broker and execute the trade, which is what this is all about, finding real trades that we can execute to make real money. All right, we are almost at 1 p.m. Eastern. I know this is a popular topic, so I want to pause, take any questions that you guys might have. Feel free to put that in the chat. If this was so thorough that nothing comes to you right away, you can always shoot us a note. Let me pull that up real quick. Here in dashboard. If you think of something afterwards, you can always shoot us a note at our email, support@ivolatility.com. Let me just get to that real quick. because I know we had a bunch of people join us after we got going. So there we are, for anything that you could need. All right. Thank you, Gates. Appreciate it. I'm glad you enjoyed it. So thank you for the kind words. It's a really powerful tool. I think sometimes people might be a little bit intimidated by the different inputs, but you can really, really boil it down to one stock and one strategy, and then really get your feet wet from there, once you have your trading thesis. So, and at IVolatility, of course, we're constantly coming out with different ideas, right? With our latest news and our different market news and research. If you joined us after we started, this is a great avenue. If you're like, what do I do? What do I read? Where do I go? This is the first thing I would look at, because this is our me working with our editorial team here to find very interesting, relevant topics that matter, as an options trader, and then how to use those to make money, on trades. So this is a really, really, really good place to come to find ideas to then run through real-time spread scanner. All right. How do you buy the service? So to buy the service, let me just put this in the chat real quick. That way you guys know. .com. So shoot us a note, support@IVolatility.com. I'm putting that right here, and then we can set you up with a service, or what we can do too is we could shoot you an email afterwards, but just in case, so you don't fall through the cracks, please shoot us a note, support@IVolatility.com, and just say, like to subscribe, and then we'll connect with you and get you going. So excellent question. And again, the account that I used today was a real-time account, so everything was updating in real time while the market was open, which I love. So do you feel like the platform will be effective for those that like 0 days to expiration options? Yeah, so I think that's a great question. I tend to trade, weeklies more than zero. You see, if you're new to options trading, you'll see it as 0 DTE, 0 days to expiration. We're bulking up, kind of that side of our platform, but there's some interesting things. Like, for example, if we pull up SPX here, you'll see the options chain pop up. So I look at SPX and VIX every day, all day, and I run all these different scans against the VIX and SPX to figure out where the market's going to go next. I actually use, in our charting webinar, I show how to use this chart to help like time the movement in the VIX and in the SPX. But if we could get this to pop up here, minimize some of these tabs. All right. So here you can see this is what that question was about, 0 days to expiration. Within, all you have to do is type in the name of the instrument that you're interested in with 0 DTE. So SPX is the good one. Maybe NDX, is another good one if you'd rather trade the NASDAQ, and you'll get a lot of good information here. So some of the things you can look at are, obviously, you could have the chart, and you could go very short term, 24 hours, and you could see what's happening with the price of, in this case, NDX, and you can see what's happening with implied volatility. So when these get out of whack, something's about to happen, and it's going to happen quickly. And so that can help dictate your trade if you want, super short-term trade. Other thing you could do, so the chart's very useful. And then also this options chain view is very useful, because look what it shows you. It gives you all the Greeks for this 0 DTE, right, for this expiration. It also here gives you the bid, the ask, the volume. Other cool things is you could come here to this probability calculator, right? Because if you're trading 0 DTE, you don't have a lot of time for things to go, your particular direction. So you could say, all right, well, what's the likelihood that, this thing is going to be trading, NDX is going to be below, 15,075, and what's the likelihood that's going to be, over 15,080 for an example, by expiration, which is in 2 hours and 57 minutes. And this will, give you the probability, right? There's a 51% chance it'll be below 1575, and there's a 46% chance it'll be above 1580. So I don't know, that's 50-50 odds, not great. But this is just a good example of how you can use the probability calculator to have your different strike prices and see what the probability is at expiration. The underlying is going to hit those different levels. You can also come over here to the options calculator. So you could see like this one is European style. We also trade American, but NDX, SPX, VIX, those trade as European style. So you can't exercise early. You have to wait till expiration, but you could come here and you could play around with, well, okay, what happens if implied volatility goes up from 9 to 20 before the close of the market today, right? And this will show what happens to the pricing, right? On the bid, the ask, value, the Greek. So you can play market maker over here too, which is also very, very useful. So I like using, for 0 DTE, I like using the probability calculator. There's also the price and implied volatility history charts, which is amazing because, bid is whatever, ask is whatever. The judge, jury, and executioner is always the last price. Where did money actually trade hands? And you can see for this strike price here, it's kind of a mouthful because these, the NDX trades at such a high nominal value, but you could see at this particular strike, there was this drop after the market open, and now there's been this increase, in price and in implied volatility, right? So we come here, implied volatility had a fall, and now it's coming higher. And then also table view is really cool because table view shows you where actual trades happened. So if you click on that, you can see at the opening, NDX was very slow. There really wasn't much action until you got in here around 10:15 in the morning. Then you see a lot of action start to take up as the market kind of wakes up after a long weekend. So that's also one of my favorite views. And then the other one is our time skew chart. So this is going to show you implied volatility over here on the y-axis, and then maturity over here. So your 0 DTE is here, and you can see what the implied vol on puts and calls are. So if you saw a huge discrepancy here between puts and calls for implied volatility and on the 0 DTE, 0 days to expiration, you would know something is going on. And you could play maybe the spread, you could play a reversion of the mean. So that's another way you could generate 0 days to expiration trades. And then if you are a longer term trader, you can, still use this. You could say, all right, well, what do things look like 1 day out with expirations 2 days out, with expirations 3 days out? And of course, the same applies for other options that don't expire daily, like Activision. This would be, 7 days, 14 days, 21, 30, so on and so on. But those are just a handful of really, really cool tools for 0 DTE. And then you can also come in here on charts. These are just certain charts that I had preloaded that I've been analyzing, but you could start off new, spot price, SPX. So here we go, time range, maybe we go 1 month, add chart. So here's our spot price for SPX. And then you could do things like you could add a chart under that, implied volatility, SPX. You could do, what do we do? 1 month, apples to apples, 7, moneyness at the money. So you have implied volatility. And what's cool about this is for SPX, you're able to add all of these different charts, and then you can condense these, timelines down as well. Like you don't have to do a month, you could do 24 hours. Here we have the shortest period possible. And then what we're doing is we're creating a very sensitive chart with all of these different chart layouts, XPX, 1 day, 7, add chart. So yeah, we're creating a very, very sensitive chart. And I call this the Big Mac view, where you have everything stacked on top of each other. So you can look at the relationship between the spot price and anything, right? Implied volatility, IV index. You could add historical volatility. You could add open interest and volume, on SPX. So then you can, drill down on 1 month, call. Let's do volume. And then just real quick, teachable moment. We gotta love these teachable moments, right? SPX, and then we want puts, we want volume. So now you could see this is a beautiful layout, and I just made it within like 2 or 3 minutes because we have our spot price, implied volatility, our IV index, and then we have our open interest and volume. So we could see, volume for SPX has been declining over the past month. That's the shortest time frame we have for open interest and volume. But for these others, I'm looking at the daily. Day one day, 24 hours. So we're creating very, very sensitive charts here. So if you're a shorter term trader, we could do a whole webinar on that. The same way we could do a whole webinar if you were a longer term trader. We could come out to 5 years, and really analyze kind of these called blue whales, right? Because blue whales are huge, but they move slowly. These blue whale type trade setups on the longer term setup as well. All about personal preference. All right, great. Well, I'm glad that's answered that question. Thank you for the kind words, David. Yes, it's a very powerful platform. It does a lot. We're constantly adding to it. We just added things like the ability to mark up these charts. So for an example, these tabs, I could do charts, 0 DTE, and then I would know anytime on this tab, I'm looking at 0 DTE charts. So this is another cool little hack. We just added these little pencils. So you can, make little notes to yourself. Like Activision, I could do real-time spread. So now I know I've been using this for the real-time spread scanner. So those are other couple cool little hacks. And I try to weave those in, even on these Tuesday sessions where they tend to be meat. There's a lot of meat on the bone. Try to weave those in as able. So, all right. Well, we are about 10 minutes after the hour. And again, coming off what I'm sure is a hectic catch-up day for everybody. So thank you for joining me. This has been Jonathan with IVolatility. We'll have our editors kind of tweak this, do some movie magic, and then it'll be in your inbox so you can review it at your leisure. And then please join us next Tuesday where we'll do our wrap-up to the real-time spread scanner topic. And you'll do so obviously by coming here to the dashboard and just hitting join, and we'll have that room all set up for everybody to register. So anyways, thanks for joining. Hope everybody had a great holiday, and until next time, happy trading.